Hello audience, in this video, I am going to be creating a new series featuring the machine learning algorithm, XGBoost. My program, which utilizes the XGBoost algorithm, essentially predicts whether a major news event coming up in the Forex market will be positive or negative for a currency pair. The program uses binary classification, hence only has two outcomes. This means that specific values for news events will not be predicted. When I created this program, I pulled data for the most common and highest reactivity news events I could find in my personal opinion and cleansed the data, as well as adding other potential factors for affecting the decision of the program. Some people may be wondering what happened with the AI Forex bot I was creating in my last videos. Unfortunately, I have had no success in getting stable profitability with the bot. This can be due to many things, including lack of data, quality of data and quality of code. I may revisit the AI Forex model in the distant future, but for now, I would like to try this series out with the program I made even before the AI model. I just never decided to actually use it properly as a strategy, until now. I have optimized the XGBoost model to the best of my ability depending on the specific news event. As I shuffle the data for each model, the accuracy results reflect the model poorly, as the model may had already seen the result. Only results after May should be considered as legitimate predictions, as this was not included in the data feed. Nevertheless, here's the results for each major news event I made a variation of the algorithm for. U.S. non-farm payroll, NFP, is the biggest news event to affect the U.S. dollar. It reflects the number of jobs in private and government sectors, excluding farm jobs, hence the name. Any change in this every month often leads to large swings. I will be trading the euro-dollar currency pair when NFP news comes out. As the last 4 dates were definitely not included in the training data, we can use these as reliable views for the stability of the model. Straight away we see that it has a success rate of 25%, which is extremely poor. The accuracy is stated to be 67%. We will continue to use the model to see if it has any improvement, but I am not optimistic about NFP news. Next is the US Core Price Index news, another major mover which I will be trading the euro-dollar pair with. This essentially shows the inflation rate of the US economy based on consumer prices. As usual, we will look at any news events released in May and onwards, and so far, this model has a 100% win accuracy on data we can say for certain it has not seen. Overall, the model should be around 80% accurate. Hopefully we should see some good results with this model over time. UK Core Price Index, same as the US CPI, but for the UK, a monthly major mover for pairs involving the sterling. I will be trading the pound against the dollar when this news drops every month or so. As shown, from May onwards we have around a 66% win ratio from this model, and an expected accuracy of 73%. A smaller mover than what has been mentioned, but a big factor for the Australian dollar is the employment change. The images show around a 33% win rate with an expected accuracy of 67%. Poor results, but there could be potential later down the line. I will be trading the AUD against the USD with this model. Another mover for the Australian dollar, but only mentioned quarterly, is the quarterly CPI. The reason for not choosing the monthly CPI data is due to the lack of data even more than the quarterly data. Due to the low number of news events, the quarterly CPI, these stats should be taken the least seriously, as only one news event has happened after May, which the model did predict correctly in all fairness. Overall, the model has an expected accuracy of 73%. Next is the UK retail sales, which shows a 66% win rate with an expected accuracy of 73%, a moderate contender. I will be trading the pound against the dollar with this model. Now here is the US retail sales, which looks really strong, after May achieving a 100% win rate, but also having an expected accuracy of 93%. This is the best forecasted model so far. I am looking forward to seeing future results when trading the euro against the dollar. Next is the US Flash Manufacturing PMI, with a win rate May onwards of 66% and expected accuracy of 80%. The German Flash Manufacturing PMI is next, only achieving a 33% win rate May onwards and an expected accuracy of 87%. This is the strongest sign of an overfitted model, even though the accuracy looks good, with data we know it has never seen. It is poor performing. The euro-dollar will be traded for this. Next is Canada's CPI index, which shows a win rate May onwards of 66% and an expected total accuracy of 60%. Out of all the models, this one seems to be the most legitimate, due to the closeness of the expected accuracy and the confirmed unseen data predictions, but is shown to be awful at predicting one of the directions of the news, with an F1 score of 25%. I will be trading the euro against the Canadian dollar. The reason for not choosing the US dollar against the Canadian dollar is the proximity of the countries to each other. Even though there will be more spread with Euro-CAD, there is more chance of major moves. Here is Canada's employment rate model, showing a win rate of 33% and expected accuracy of 60%. Another legitimate-looking model due to the lower expected accuracy and win rate. Again, I will be trading the Euro-CAD pair. Finally is the Swiss CPI news model, which shows a 75% win rate May onwards and an expected accuracy of 83%. A solid-looking model which I will be trading the US dollar against the Swiss franc. The statistics these models show do not show the true accuracy for each of the models, as many of these models are overfitted. These images show the typical log loss and error graphs that was shown for a lot of the models previously shown. The positive here is that even for test data, the models are lowering the amount they get wrong, but the log loss graph increasing is a sign of overfitting. Due to the lack of data for each news event, these graphs look poor and basically state that the models would be no better than just simply guessing either up or down. Nevertheless, I have created a demo account of $3,000 and only basing my trades on what each model tells me. For example, if the model for predicting the US NFP expects the NFP value to be higher than the forecast, then I would be bullish for the dollar, and place a trade either the day before, an hour before, or even 5 minutes before. I will manually set my stop loss and take profit, ensuring the stop loss is below or above a previous high or low or solid area of support or resistance. I will be aiming for RR of 1 to 3, with a 1 to 2 being the lowest I will go to. Once the news event hits, if the model predicted right, but does not reach my take profit, I will wait for another 4-5 minute candles, and close out of the trade regardless. I am not expecting to make money from this, due to these reasons. 1. Spreads. Spreads will have an effect on our profits. We won't be getting a perfect 1 to 3 or 1 to 2 ratio each time we are successful. Additionally, when we are wrong about a trade, even though the stop loss is tighter than the take profit, we have no idea when our position will be closed during news. If news was massive and we were wrong, then it could lose us much more than we anticipated. 2. Overfitted models. As previously mentioned, the models are somewhat overfitted. The stats for each model shown before do not correctly show the expected success rate. Ultimately, we could be correct with a prediction, but then be wrong about the next, and break even though our RR is at minimum 1 to 2. Anyway, I will be making videos every 1 to 2 weeks, giving updates on what the models predicted and whether I made a profit or not. Even if I lose money, it was an idea for a series related to Forex I could make. Thank you for watching, and I hope to update in 1 to 2 weeks.